guy, Jeffrey Liu, he's unavailable today, but Glenn Heaton's here. So some of our strategic alliances are here, but I wanted to give them a mention. So big shout out to them. Okay, let's have a look at what's happening in the property market across Australia and New Zealand. So housing values. Okay, let's start with this. Last month, being February, of course, Sydney 0.5% growth, 0.6 for the quarter. They're still showing a 10.6% growth over the last 12 months. Melbourne 0.1, but it is a positive this month, which is good. Quarter negative 0.6. And only 4% over the last 12 months. So they are running close to a plateaued market, if anything. So Melbourne is definitely struggling most when it comes to the major cities. Brisbane, 0.9% growth, 2.9 for the quarter, which is pretty respectable, and 15.6 for the last 12 months. Adelaide, 1.1, 3.6, and 11.8 for the 12 months. And Perth leading the way with 1.8 last month, 5.2 for the quarter, and a rocking 18.3% growth over the last 12 months. That's ballistic. But let's put that into perspective. I mean, Sydney and Melbourne and Brisbane and some of the other states have had 29% and even New Zealand. So it's very high, and it's wonderful for the Perthians who own property, that is. Not so good for real estate agents, and certainly not good for buyers, but it's still not off the charts. I think it's good, but it's still has a way to go before it was reached some of the other major cities. Okay, combined capital cities 0.6 for the month, 1.2 for the quarter, and 10% growth combined capital cities. Regional 0.6 for the month, 1.3 for the quarter, and 5.5 regional last 12 months. Nationally, this is the one that everybody goes by, but it's not quite reflective on where they are, but it's still important. 0.6 for the month growth, that is, 1.3 for the quarter, and 8.9 for the last 12 months. So that is interesting. Let's have a look a little bit closer. And I use CoreLogic reports. So if you were wondering where I get this dope from, I get it from CoreLogic. Perth continues to stand out with a substantially higher rate of growth compared to any other region, up 1.8 over the month. Adelaide 1.1, we've just been through that, and show consistently high rate of capital growth month to month. These regions are generally benefiting from a combination of comparatively lower housing prices. Yep, so obviously still very affordable in the minor cities being, of course, Adelaide, Brizzy, Queensland, and of course WA. So that's hence why we're seeing continued significant growth. We've been a bit behind over the last 10 to 12 years. Potentially, we are seeing some early signs of a boost of housing confidence, and that is because inflation eases. Expectation of a rate cut or cuts later this year are firming up. The re-acceleration in value growth has been accompanied by a bounce back in auction clearance rates. Although the pace of gains has shown some uplift, most regions are still recording value growth well below the highs of last year when the national index rose 1.3% in May. I'm just getting a photo. As you do. Okay, let's have a look at what's happening in the rental market. Great to have our rental people here. I did notice there's a few there, so welcome to you guys as well. So growth in the rental values has done re-acceleration through early 2024, with the monthly pace of change rising to 0.9% in Feb, the highest reading since March last year. This re-acceleration also saw the rolling quarterly change in rents rise to 2.4%. and the highest since May last year. Great rental market as well. The pickup in rents is mostly a seasonal phenomenon. Obviously, early in the year is a banging time for property rentals, property management, with the first quarter of the year historically showing an accelerated trend. However, there has also been a pickup in annual growth trend for rents. The acceleration in rental trends is being driven by detached housing sector. So obviously smaller properties, units, and of course apartments and things like that, villas and stuff. All right, so property rental market's going well. Let's have a look at a holistic view. Other than what we've mentioned, housing turnover is tracking higher than at the same time a year ago, but slightly below the previous 5-year average. A trend that seems more certain going forward is the sheer diversity in market conditions that have emerged through the second half of 2023 and into 2024. Actually, there's probably no better way to end that part of the property report. Is I looked at this and it left me scratching my head a little bit, not massively. I was expecting further declines and further, I suppose, tightening, but it's possibly just gone a few percent the other way, which I suppose is good. It's not horrible. Let's have a look what New Zealand's doing. Now, so soft start to the 2024 extends into February. National home values rose 0.3% in February, continuing the decelerating trend seen since December. So still having growth, but slow growth. I find the New Zealand market for us Aussies is actually a very interesting market to focus on because we tend to follow it, strangely enough. They should be following us, but we tend to follow them when it comes to the market. Weird, but true. Property values have risen for 5 consecutive months. However, the pace of gains is down from November's 0.4 rise and December's 1% increase. The average property values across New Zealand now stand at 930,000, up 2.8% from September, but still 10.8 below the recent peak. So you can imagine their peak. They had the biggest rises in the whole of Australasia, New Zealand. Massive. I think they were the 29 percenters. They went ballistic. And they were already going ballistic on quite significant highs, which was, really, really strange. But again, it's a micro market and it's a very buoyant market, New Zealand market. Most of the main centres were relatively subdued in February, with Hamilton, Tauranga and Christchurch seeing margins of 0.1% rises, while Dunedin and Auckland ticked up 0.2% rises. Wellington saw a stronger 0.6 rise in February, but that was after a below average result in January. So what's going on? Why? Given that mortgages rates remain high and property sales volumes through January remained a near record low, buyers and sellers are still taking their time to buy. And I think we're seeing a lot of that on the East Coast. I think Alex has just confirmed that, and a lot of our East Coast clients have confirmed that as well. For new entrants to the housing market, there are still significant challenges in terms of saving a deposit. That's happening now in Perth. I was speaking to a client yesterday, and she is talking about selling her property in one of the. So this suburb is about 30 minutes from Perth, and it's a 4x2 selling for over $900,000, which I used to sell in that corridor, so I know the prices. And when I was there, it was 5 to 600. And that was 2014 when I stopped selling. So it's 10 years. So it's nearly doubled, which is freaking mental. So yeah. What else is happening? Why is it the way it is? For new entrants, so while the official cash rate remains on hold for now, rise in the short term hasn't dissipated altogether, and the likelihood of official cash rate cuts aren't on the table for the foreseeable future either. That's in New Zealand. How are we doing for time? I've got 2 more minutes to talk about the market. Okay. Perth. Let's have a look at there, because I know that 75% of our clients are from Perth, 25 East Coast and New Zealand. Sales transaction in Perth last week was 12.9% on the previous week. Sales transaction in Perth last week, 12.9. Stock levels, 4,000 properties in the market in Perth. But it is up 1.1%. So the trend is going the other way. Finally, last week's figures for properties available is 1.3% higher than 4 weeks ago. Property Perth rental market, 1,799 properties for rent, extremely low, which is 6.9% up on the week prior. REMA members reported 489 properties leased last week, which is 20.1% lower. So that's diabolical. Okay, let's talk to two people about their markets. Alex has mentioned her market. Who have we got there? Jelena, let's talk to you about your market. What's happening in your market?
Well, rentals are very scarce at the moment. I
Not
have
for you.
noticed.
16 new managements. What are you doing, girl? Congratulations. That's amazing. Well done. We're going to talk about that in a second, but carry on. Sorry for interrupting.
No, it's okay. It's still changing though, like regionally. So around December, November, you'd have about 30 properties on realestate.com in Geraldton. And now I believe it's sitting around 60. I'm finding it harder to move units. And the clientele has dropped. Like we've done some TICA checks on some people. So I don't know if everyone knows what TICA is, but National Tenants Databases. And a lot more people that have done the wrong thing are coming and rising up. And it's very, very interesting to have those conversations. One turned around and said to me, well, just don't put my name on the lease. Like you can put my partner's name and my kid's name. I'm like, no. Like if you're living there, you have to be on there. So it's very interesting at the moment. So even if they move from Queensland to WA, that debt and that history still follows them. I'm finding that there is movement with companies still, like we're dealing a bit more with some bigger companies leasing. Investors are very hit and miss at the moment. We're getting a lot of investors that are buying in cheaper areas. Like we're extremely cheap compared to Perth in general. But explaining to them that obviously when the market starts to change, the type of client that's going to be attracted to it. At the moment, you know, we have a low vacancy, so we're going to have a lot more people in the pipeline. But when that market changes, it's about important having a long-term tenant that wants to be in that area, and explaining the maintenance and stuff like that. So there's a lot of investors out there at the moment that I've chatted with, and my morals don't align with them, but they want maximum returns and not to spend anything. And that's not how you run an investment. It is not. You have to maintain it. It's an asset. Very, very interesting.
We had a cheeky nickname for them, slumlords, and I know that's terrible, but it's very strange how, you know, some people who own properties don't realize that their properties need to be upkept, don't they?
Well, it's more the fact of creating a really good relationship between your tenant and owner. Like we want to make sure
rents these days, how high they are. I mean,
well, people want, and that's another expectation.
They want the pound of flesh.
Yes, well, if you're paying premium dollar, you want your hot water fixed within that 48 hours.
Oh yeah.
You're gonna want your aircon working. I'm not gonna sit here and die in 40 to 50 degree heat. Like we had 49 degrees the other day. If I'm paying a certain amount of money, I would want a service for it. So explaining that to people and getting them to understand is very interesting at the moment. But all in all, most clients that I deal with are quite fantastic. I do admit that I do have a little bit of a selection where I'm very choosy. If I brought on everything that came through the door, my numbers would be staggering. But I have to be mindful that there's a team behind me and I don't want to burn out my team. So it's really important that you look after the people that look after you.
Great, well done. And you're doing an amazing job. What we used to do, just a little tip by that, when we used to get called in, because I had the same thing. I worked in some areas that were lower income, and we had to be very careful on and selective what we took property management wise. But we used to have a report. So before we took it on, if they did this, then we'd come back and inspect it and possibly take it on. And some did, and some didn't. But the ones who did, we knew they were keen, they were serious, and they wanted us, which was nice.
Yeah, we do that quite a lot. I actually work with a lot of buyers agents or people that are looking to buy, and I go through for the initial inspection and go, okay, if you want to take this on, this is the maintenance that you need to deal with now. And this is going to be the future stuff that you're going to have to look at. And you have to be open to it and understand that when the market starts to change, or if you want more money, you're going to have to do those improvements.
Mm.
Hmm.
We've got a property portfolio, as you know, so we deal with a lot of tenants and property managers in particular. I think there's also has to be a bit of a, it's not all about the landlords. I think the tenants need to step up and take some care as well.
Oh, yeah,
We've had a few requests and a few complaints. I said, nah, flipping that you can sort out yourself. For God's sake, it's going to cost us. To get someone out there to do that job is going to cost us $190. All you need to do is get a bloody plug from Bunnings or friggin' IGA. Come on, like seriously. And if they keep doing that, we just get rid of them and get decent people who realize that it is a win-win. So I
Yeah,
think there has to be a bit of give and take.
Oh, yeah, definitely. There is 100% that aspect. So it's really important to make sure that you action maintenance within that time period so people feel like they're being cared and they're getting a service and they want to stay. But
Yes.
also you have to push back when the time is right. Like you sit there and go, oh, my toilet's leaking. Well, what's wrong with your toilet?
Exactly. Have you looked? Yeah.
Yeah,
Thank
like what's
you,
actually
Jill.
going on?
Thank you so much. Great to have your feedback about the Geraldton market, and you guys are leaders in the field down there. So keep up the good work, and there is some light at the end of the tunnel for you there.